What is going on YouTube? How's it going today? It is your boy Manny with Money with Manny 101 on another episode. Today we're going to cover Investing 101. So if you haven't done yet and you're new to the channel, please make sure you like, comment, and subscribe to the video. This isn't going to be a deep dive. I'm not going to show you how to pick your stocks yet, but at the end of the video I am going to show you myself depositing $100 into my Robinhood account and different ways of buying and selling those stocks. I'm going to go over a brief overview of how Robinhood works, which is what I use. I'll also have my link. That way, if you want to join Robinhood, you get a free stock and I'll get a free stock. And if you have a friend that actually has Robinhood, might as well ask him for his link. Get yourself a free stock with somebody that you know rather than just using mine. So just dive right into it. The two things I'm going to cover is just buying and selling, and then how the stock market works. But to start it off, stock market hours is the most important thing. You can only buy stocks unless you're a hedge fund or a bigger entity. You can only buy it from Monday to Friday, 9:30 a.m. to 4 p.m. Eastern time. I'm in the Central time, so I start at 8:30 a.m., but it's the same thing as 9:30 a.m. Eastern time. There's three types of traders as far as I'm concerned. There's a day trading. Most of those people are options traders, or they swing trade actual stocks that are really cheap. Put $1,000 into something that's like 20 cents. Once it hits 24 cents, you take your $1,000 out and you've made yourself a pretty good profit. Day trader just means you buy something today and you sell it today. It's not within 24 hours, because if you buy it at 4 p.m. today and sell it the next day at 8 a.m., it's not considered a day trade because it's the next business day. So buying and selling on the same business day is considered day trading. Short-term traders is anybody that trades stock for less than a year. When it comes to short-term, that's mostly what I've done so far. I haven't done anything longer than 2 years. I started investing, I think 2018 or so, and I started with $100 and started depositing $50 every paycheck. So with that being said, short-term, you can see profit, but then you get hit with capital gains tax, which is around 40%, and most of that profit is gone. So the most safe way to invest is long-term investing. It's anything greater than a year, because with this type of investing, history is king. So you want to invest in a company that is safe, a company that'll last longer, ETFs, stuff like that. So I highly recommend reoccurring deposits, which just means that you deposit over time, and that's how you grow your account, rather than just taking $1,000 and trying to turn it into $2,000 out of nowhere. That can be done with day trading, but if you're looking at long-term or short-term, reoccurring is going to be your best bet, because you learn as you go and you don't start with a big amount. I recommend starting small. I started with $100, like I said, and was able to grow my account to about $6,000 before I pulled the money out, and that was within a 1 year span. So like I said, the most important thing here is to only invest what you're willing to lose. The reason why I say that is because a lot of people start investing and they start trying to day trade or short-term trade, swing trade, things that are complicated, and they end up losing all their money in options, whatever it might be. This isn't going to go that deep into it, but when it comes to those type of things, only invest what you're willing to lose. But obviously, if you're playing it safe, you're not investing what you're willing to lose, you're investing into your future. So that means you're keeping what you put in for the long haul. This is another way to set yourself up for success, depending on the returns each year. Now, to get into buying and selling, there's only two types of buying that I do. It's a market buy, which means I'm buying the stock at the price of the market. It is the easiest way to execute a sale or a buy. Essentially, you're just saying whatever the price is at, that's what I'm going to buy it at. And then a limit order. A limit order means you want to see it at you want to buy it at a lower price. So if the stock is trading at $5.50, for example, and you only want to buy it at $5.25, then you would put a limit order. You could put it good until end of day, or I think Robinhood has good for the next 90 days. So I normally do good for the next 90 days if I'm that much of a stickler, if I think that it's going to tank before it goes back up. So limit order is a pretty safe way to get stocks at a premium or on sale, as people say. Selling, What I want to cover, there's market sell, same thing as market buy. Essentially, you want to sell it at whatever the price is. So if there's a lot of volatility, sometimes it won't execute at the price you thought it was. If it's dropping, it'll sell it for a lot lower. Now the stop loss is essentially you want to stop a loss when it's going up. You just set a stop loss. So if the stock is at $5.50 when you buy it, and then it ends up being at $6, but you don't want to sell it yet, just in case it continues to go up, you could put a stop loss sell at $5.50, or $5.90, whatever it might be. That way you still make 40 cents if it ends up dropping, but you're still in the game if it continues to rise, which leads to a trailing stop loss. Trailing stop loss requires a lot of attention, because as it's going up, you want to keep moving your stop loss. So for that same example, if it's at $6, you put your first stop loss at $5.90. As it keeps going up, let's say it hits $6.25, you can move your stop loss up to $6.15, and you continue, you're trailing it. As it goes up, you keep adjusting your stop loss. And if you want to stay in the game, as it starts dropping, you could either keep the stop loss or it executes the sale once it hits that $6.15 or whatever it might be, or you can start trailing it back down or putting it at a $6 because you're happy with a 50 cents gain as it keeps going up. Same thing with the limit order. Limit order essentially is saying that if it hits a certain price, then it should execute. So let's say you buy it at $5.50. It's at $6. Let's say you're happy if it hits $6.50 to sell. Then you'd put a limit order for it to execute at $6.50. So as it's going up, if it strikes $6.50, it'll automatically sell all the stocks you have, or however many you decide to put. Trailing, same concept. You keep rising it as it's going up. So if it hits $6.50 and you think it's going to keep going up, you can move that up to $6.60. That's pretty simple. Now what I'm going to do is essentially introduce you to how I would invest, or how to buy and sell on Robinhood with $100. I'm going to deposit $100 from my bank account and essentially walk you through the different steps. Alright, so as you can see here, I've already added the $100, which is why it shows $100.43. This is essentially how Robinhood's homepage looks. So if you click at the little search button, what you're gonna get is this. You're essentially browsing. I usually go into the trendings list just to see what's trending and essentially to guide me into what I want to trade. But like I said, this isn't a video about that. It is more about just buying and selling. ETFs is just essentially, like I said, it's an exchange trade funds. It's essentially how you focus on one industry essentially, and you can buy multiple different, or an ETF that essentially buys multiple things like oil, technology, things like that. So essentially this is just me looking through just to find a good stock to put $100 in, because I'm probably not going to pull this $100 out. I'll just leave it in there since I have nothing else to do with it. So I'm looking through ETFs. I essentially set it up so I could look from the cheapest all the way to the most expensive. Since I only have $100, what I do is invest in what's known as penny stocks. Penny stocks is any stock that essentially is $10 or less, is trading for $10 or less. So it doesn't mean that it's worth a penny. It's essentially just something that's cheap in the stock market, because normally the more expensive stocks have more security, but cheaper the stock, the more your return on it normally is, because of the simple fact that if you go from $4 to $8, you double your money. So I found two pretty good ETFs here that I'm going to go into to show you how to buy. So essentially I look at this one, $3.77. The reason why I like it is because it has dividends, and also the PE ratio is pretty good. So I'll click buy. Instead of just buying in shares, what I'm going to do is I'm going to show you how to buy in dollars, which is a pretty cool feature that Robinhood came out with. At first I was going to use the whole $100, but I decided to go with half. That way I can teach you how to use the other half and how to buy with shares and make essentially a limit order. So essentially there you go. I bought $50.43 worth. get the email there, get the notification that lets me know I executed. That is known as a market buy. I bought it. I didn't care what the price of the stock was. I just essentially bought it based on the money that I deposited, which is why you see I have 13 point some shares, because I didn't care about the price of it. I just cared that I put $50 into it. The next one I'm going into is this one. With the remaining of the money, what I'm going to do is try to buy in shares. That way you see how that looks. Since I only have $50 left, I can only get about 6 shares because 7 shares puts me right over 50. So I'll put 6 shares at a market buy. Once I swipe up, I get to order. Since it's a market buy, it'll execute regardless because volatility doesn't matter. Now I get the emails again. And now with the last $6.98 that I have left, I can set a limit buy or a limit order. So if it drops to that certain price, which I'll put here, I forgot essentially how much I had. So I'm gonna go back to see how much I have. But as you can tell, market hours that I was talking about. Go back just to see how much I have. $6.98 is the limit. I'm gonna do market hours today and then swipe up. I could also have put it for 90 days, but I decided not to do that because this is just for the video. Now we all know that's not gonna execute. I don't think it's gonna drop all the way to $6.98 because that's pretty low. So I'm gonna go back in and cancel that market order later on and just spend the money buying something else so that it's not just sitting there. Here I'm just showing you how you could view your homepage and the stocks that you have. You could view it in multiple ways. I like to look at it personally on my total return. Unless I'm doing day trades, then I look at my daily return. Last price really does nothing for me, and all the other ones, percentage change, I could care less about the percentage unless I'm using it as a long-term type of thing. So I want to see my yearly percentages and stuff like that. Here you're seeing my limit buy. I canceled it just so I can have that money back, and I'm gonna put that money somewhere else. That way I don't just have $6.98 sitting there. So I'll go over here and do a 2 share, puts me over. So I can't really do that. So I'm probably gonna go back and buy it in dollars. $6.98. And then there you go. I bought 1 share, 0.87. So there you go. You get your email because you executed. And there you go.